Hello and welcome to the look ahead for Tuesday, the 27th of February, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we've got some earnings still going on in the US. We've got eBay, First Solar and Urban Outfitters among the big names expected to report earnings tomorrow. Then on the economic calendar, first up will be German JFK consumer confidence. Now, this is going to be watched closely after consumer confidence fell by more than expected in January. The markets will be watching closely to see whether that gloomy start to the year continues in February. Let's not forget that PMI data that we've seen from Germany last week also painted a pretty gloomy picture. So all in all, the outlook for the German economy, we know it's weak. We're expecting further weakness. Any signs that perhaps consumer confidence is actually stronger than expected could help to bolster the case of a faster recovery. But at the moment, that's looking unlikely. Now, just having a look here, though, at the DAX, the DAX is currently trading around all-time highs. We can see it's pushing towards that 17,500 level. That's the level that buyers are going to be looking to beat. Just be wary, though, the RSI appears to just be attempting to push over into overbought territory. So that could warrant some caution for buyers. As far as support is concerned, I think as long as the price remains above that 17,000 level, then we expect buyers to be in control. A break below 17,000 could bring 16,800, which is the February low, back into focus. So just having a look back at what to be watching, we've also got Bank of England's Ramsden, who is speaking. Interestingly, I mean, if we just take a look at the pound, actually, the pound has held up really pretty well against the US dollar. I mean, it's rising for a fifth straight day today, which marks its longest running winning streak this year. And it's pushing higher without really any high impacting economic data to support it. So obviously we did have some weakness in the US dollar last week, which the pound has been capitalizing on. But I think there's also this general belief that the Bank of England is not going to be one of the first major central banks to start cutting rates, and that is supporting the pound. The market's broadly expecting the Bank of England to start cutting interest rates around August, which is later than the June date, which is expected for both the ECB and the Federal Reserve. And as a result, we are seeing sterling pretty well supported around this 127 level. Just looking at that chart, we can see it's trading within a symmetrical triangle. As far as the RSI is also supporting further upside. We're looking for a breakout of that triangle. That's at the 127.20. That's the falling trend line resistance. If we can get a push above there, that'll bring 127.90, the February high, into view, and also 128, the round number. On the downside, I think the major support there is going to be the 200 SMA that we'll be watching for at around the 125.70 level. If we do get a break out of there, that's also bringing the price out of that symmetrical triangle to the downside, and that will bring 125.20, which is the 2024 low, back into focus. So there is quite a lot of data as far over in the US. So starting, we've got US durable goods expected to drop really quite sharply, down 4.5% month on month. That was after a 0% reading in the previous month. House price index also in focus, expected to push up 0.3%. I think this is going to be interesting just because obviously with expectations for interest rates to start falling potentially in June, we're seeing mortgages just slip that little bit lower below that 7% level, which is offering some support now to the housing market. And then we've also got US consumer confidence. Consumer confidence in the US in January actually rose to that 114.8 level, which was the highest level since December 2021. So the market's going to be looking to see whether we continue to get that improving consumer confidence, and in which case that could sort of fuel expectations of further consumption. A happy consumer tends to spend more, so that tends to be sort of an inflationary indicator, at least a lead indicator. So that will be watched closely. If we get a strong beat there, we've seen that data from the US is showing that the economy is proving to be resilient despite these, the 22-year high interest rates. So strong consumer confidence. We saw jobless claims fall by less than expected last week. The services PMI was, still in growth territory. So data does seem to be holding up in the US, which we know, and that's the reason that the Federal Reserve has been pushing back on those expectations of rate cuts. Now, the market at the beginning of the year, the market was looking at rate cuts in March. That's now been repriced to rate cuts really in June, which is more or less in line with where the Fed has been sort of suggesting as well, indicating. Just having a look here at the Dow Jones. Dow's trading around an all-time high at the moment. That's after the really impressive rallies that we saw last week on the back of that AI optimism following the blowout results from NVIDIA. As far as levels to watch, the next big level for the Dow Jones is going to be the 40,000, but just be wary there. I mean, we can see that there's the RSIs, there's a bearish divergence going on, which could suggest that the price could struggle to push much higher, at least in the near term. We could see some consolidation, or at least a reversal, if not a reversal, from these levels. As far as support is concerned, 38,335, that was last week's low. And then below that, we've got around the 38,000 mark, which was the February low. Are going to be levels to watch on the downside. And just finally, I think we just need to be taking a look at the US dollar, Japanese yen. Now, US dollar, Japanese yen, we've got some Japanese inflation data out actually a bit later today. And that's expected to show core inflation cooling to 1.8% annually, down from 2.3%. Now, cooling inflation is going to give, or combined with the fact that Japan has tipped into a recession, is going to give the Bank of Japan little reason to really move out of negative interest rates. At the same time, we've got the Federal Reserve, strong, resilient US data, and the Federal Reserve pushing back against early rate cuts in the US. So as a result, we've seen this 8-week rally in the US dollar, Japanese yen. The price at the moment is testing around the 150.80 level, 158.90 level, which is the 2024 high. If we can get a break above that, then that's going to bring in that 151.90 level, which was the late 2023 high, back into play. That is a multi-decade high. At these levels, that does make the yen vulnerable to FX intervention by the Japanese authorities. That's just something to be watching out for. On the downside, I suppose, just covering off support levels, I think be looking at around 149.50. That was the mid-February low. That could offer a little bit of support ahead of that January high level. That is all from me. I hope you like what you haven't seen, and if you have, then please do press like at the on this film. And if you would like to receive more videos like this, then do subscribe. Thank you very much.